we spend most of our time on how to generate income. You guys agree with that? That's what we do, right? But the challenge, I think, for our industry historically, and you guys probably know this better than me, is the financial troubles we get in when you start making Mitch kind of money. And what do we do with all of that money, right? And so I brought up my personal financial team to share some best practices, some things for you guys to consider as you go back into your market. Some of you work with Joe, some of you may work with Paul, but I wanted to have these guys up here to start to have you think about, okay, I'm an independent contractor, how do I set myself up? Because a lot of you are coming out of a W-2, you're coming out of a corporate world where you didn't have to think about any of this, right, Don? You were an engineer, you just signed the paperwork and they started putting money in your 401k and doing all these different things. And trust me, I didn't think about this early enough. When I met Joe, I'll be honest, I was a financial mess, right? You had to clean me up.
Actually, when we met, is this on?
Yeah, it should be on.
Is it on?
There we go.
We met when you were 16 years old.
That's a great point. Yeah. So it was a huge financial mess. Yes.
Yeah, but then about 10, 11 years ago?
Yeah, got everything cleaned up. So what I'm going to do, so Joe, why don't you take a second, you guys introduce yourselves and what it is that you do, and then we'll start to kind of get into some of these best practices.
Sure. Thanks, Brandon. Morning, everybody. My name's Joe Angel. I'm a CPA. I am licensed in all 50 states. Currently, I have realtors, some of you, in 42 out of 50 states. I've been doing this about 20 years. Full service CPA firm, bunch of CPAs. We have paralegals. One of them's back there. We set up entities, LLCs, S corporations. I passed out to you guys a realtor deduction checklist. The focus of my firm are realtors, mortgage professionals throughout the country. Like I said, Brandon's been a client of mine for over a decade, and I work with some of you guys.
Awesome. Paul?
So my name's Paul Monticelli. I'm a senior vice president for UBS Financial. My main focus is personal financial planning. So basically taking people in, looking over their goals, looking to see what might work best for them, and just setting them up for the future, trying to get that balance of living for today but still planning for tomorrow.
Yeah, and I'm probably Paul's worst and maybe best client at the same time because I fight it. I fight still maybe giving up control of some, right, Ben? So giving up control of the money that I earn and working with a team of professionals, but that's important, right, is to have a team of professionals. So here's how I want to kind of have this conversation. I want everybody to walk away with from our conversation right now on some practical things that they can do to be more what I'll call financial responsible. Is that fair? You guys good with that? Okay. So the first question is always when somebody gets into the real estate business, and business being the key word, how do we set up the business entity so that they can not only operate and treat it like a business, but get some of the benefits? So when we talk about LLCs and S corporations, things of that nature, let's talk about it from the new agent perspective, and then when we can start to think about S election.
Sure. So, you hear all kinds of different stuff, C corporations, S corporations, LLCs.
Put that mic, I think, closer. There you go.
There you go. C corporations do not make sense for realtors, okay? You are taxed as a realtor, your gross commission income, your GCI, minus expenses equals a net number, okay? That net number in a C corporation, 21%, then another 21% if you want to take any of that money out. So C corporations don't make sense. So then it's LLC or S corporation, okay? S corporations, not just for realtors, but for all small businesses, at about 150,000 gross is when an S corporation makes sense, okay? So GCI minus expenses, net number. That net number in an S corporation, you're not paying any self-employment tax, which is 15.3%, okay? In LLC or Schedule C, you will. So you're probably saying, oh, let's just all go S corporation. With an S corporation, you, the officer, has to be on what they call a reasonable compensation or a wage. Okay, that's why that 150 number makes the most sense. So new people in realtors, a lot of brand in real estate, you realtors, a lot of Brandon students. What I suggest, you're new to real estate, we open up an LLC, okay? Open up this LLC, your team name, your brand, you get that good business bank account, one credit card, you start running your life like a business, okay? You have this LLC. When you get to that 150 number, we can step in and we select that LLC so it's treated as an S corporation for tax purposes.
Yep.
Same name, same tax ID, but that's how I recommend you guys to start. I have 2,800 realtors, like I said, in 42 states. I think that makes the most sense. Do it right early on. Set up that entity, business bank account, business credit card. Okay?
Perfect. Now, so we got some questions. So we've got a cube that's going to go around town, I believe. There's a mic that we're going to throw around. If you have questions under each thing that we talk about, if you guys have questions to clarify this with Paul or Joe, let's just ask them so you have as much practical takeaways as possible. Dawn, I think you had a question? Thanks, Colton.
Real quick, too. So in that equation, GCI minus expenses net number. In an LLC or a Schedule C on your personal tax return, same tax effect. The tax savings happens with the S corporation. Another reason the LLC early on, Schedule C's on your personal tax return are the number one audit item within the IRS. You probably saw the IRS has hired 87,000 new agents. What are they focused on?
Realtors.
Small businesses and cannabis, okay? Cannabis is tricky. Here in Michigan, recreational and medicinal, you can drive around, buy pot. It's got a weird tax code, but
Yeah.
that's what they're focused on. So if we know that Schedule C's are a high audit item, get them off that personal return. On the Schedule C, you're saying, hey, IRS, look at my income. Look at all my, I call them bullshit expenses, right? The meals, the cell phone, the travel, all that stuff. Why put that on your personal tax return if you don't have to? The LLC, S corporations, separate returns that flow through to your personal return with one K1 and one number. A lot cleaner. Okay?
Go ahead, Dawn.
I have a quick question. The number, the 150, is that the net, when you get to a net of 150 or a gross of 150?
Gross.
You switch.
GCI 150.
Okay.
Even if you're getting close to it, that's when it makes the most sense on the S corporation. Another good point
You have to wait
here-
till the end of the year? Like, let's say you're an LLC and you need to switch. Do you have to wait till the next tax
No,
year?
I was going to just say that. Great question. So if we set up this LLC, and now you're rolling, you're grooving, you're jamming, Brandon's doing his job, you guys are making a bunch of money, right? Hey, what do? You can do a late election on an LLC all the way up until March 15th of the following year. So let's say you have an LLC right now, you can make an S election up until March 15th, 2023, that will go retro for all of 2022. Can't do that if it's a Schedule C.
Is that the same off of S Corp?
What's that?
Is that the same transition if you transition off of S Corp election?
You would go, why would you would get off of it for what reason?
If you go above, or you're saying LLC up to 150?
Yeah, LLC and then
S corp.
over to the S. Rarely do you see people elect out of an S corporation.
Yeah, income, I think the question is, there's no excess of income. You could stay in an S corp forever.
Oh, yeah, so I misunderstood
Yeah.
what you're saying. That's right, it's from 150 and beyond. And then when it gets to beyond, there's a lot of cool stuff you can do. You're on a W-2, your spouse is on a W-2, get
kids.
with Paul, max out retirement accounts, kids are on W-2s, they're advertising for you on Facebook. You know, a lot of creative stuff you can do within that S corporation. Yeah.
Perfect. All right, questions?
Yep. So when would it make sense as far as like if you have employees, or if you would it make sense to hire an employee with an S corp, or would it just be a write-off like if you have assistants or VAs and all
Yeah,
that?
so whether you're an S corp or an LLC, if you're hiring people, you can either put them on a wage, or you can 1099 them and just pay them, you know, Venmo, Zelle, whatever throughout the year. Keep in mind, if you're going to hire somebody on a wage, a W-2, let's say you pay that person 40 grand a year, that's going to actually cost you about 45 grand a year because you have to match the payroll taxes as the employer. Versus a 1099, you pay them 40, it costs you 40. So really make sure that that person's a full-time employee. A lot of times with these real estate teams, as you grow, you get some full-time people, then you can even offer them 401k plans, which Paul will talk more about. That's how I see a lot of these teams go. You know, you guys already know this, you're in an industry where, you know, year one, you come in, hi Joe, hi Paul, here's my $50,000 1099. Year two, it's 200. Year five, $1 million 1099. I've seen it over and over, and it's one of the only industries that you guys can do that.
Yeah, 100%.
Yeah.
It's a great point.
Yeah.
Real quick, and I don't know if this is what you're asking or not, I think one of the questions that comes up a lot is 1099 versus wage versus an expense. What I mean by this is a lot of people will outsource certain tasks, like a virtual assistant, right, overseas. You're not going to issue a 1099 to somebody in maybe the Philippines. You might just put that on as an expense. Is that right?
Yeah, so the rules on that, if you pay anybody over $600 that has a social security number, an LLC or an individual, not a corp.
Okay, that's what we're talking about. Is a corp? You hire a company, not
you
a person.
You hire Verizon, wireless, or a company, you do not have to 1099 them.
Yeah.
An LLC or an individual, you do. Let's say you did pay somebody, you can't track down their social, stick it under, outside services, something like that, so you can still get the write-off.
So anybody that has an outsourced virtual anything, you're hiring the company, right? That's different. And I don't know, was that what you were asking? Do you have some outsourced assistants? All right, so just want to be clear, you're not issuing them a 1099, correct? It's a company.
Not a corp,
Yeah.
not Verizon, not Angel and Company,
Yeah.
but if it's an LLC or an individual, per the IRS rules, you're supposed to do a 1099.
Make sense? Okay. So now the next thing is, and there's a lot of questions, I'm going to clarify this for this group today because I've gotten this question a lot, is the business bank account. And the reason, and you and I handle this all the time, the challenge that we have is the brokers come to us and say, well, I can't issue a commission check to an LLC, right? You guys have heard that before, yes? No? Okay, cool.
Some, yeah, it's like 50-50.
So here's how this is going to work. How many of you have an LLC? Let's just establish that. Okay, so what happens is when your brokerage is issuing you the check, that check then needs to go directly into the business bank account, correct?
Correct.
Okay, so let's talk about that for a second.
Yeah, so let's say they can't.
Well,
Okay.
so just to clarify, so the broker can issue the check to individual Ben. Ben can do whatever he wants with that. I think where the trouble comes in, if you guys have ever experienced this, is you tell broker Remax, hey, just issue this check in my LLC name. The broker's like, I can't issue a company a check, but there's no issue with them getting the check personal and going into the bank account.
Correct.
Beautiful.
Yep. That's right. And then you're saying what to do with it then?
Yeah, so once that goes into that bank account, is everybody doing it that way? Okay, so that's why I want to stay here for just a second, because there's a lot of confusion. So where'd that mic go, Colton?
I just had a question.
Yeah, let's clarify this. Go ahead,
Yeah.
Portia.
So you touched on it just for a little bit because I have a W-2 and I do real estate. So when does this 150 number come into
Only
play?
your gross commission
Just
income,
gross
your
commission.
1099 business income, and like I said, for any business, any small business, 150 gross is when it really makes sense for an S corporation. But what Brandon was saying, okay, the business bank account, the rules, the IRS does not care if you commingle stuff. I got a personal account here, I got this, that, the other thing. They just don't want you to double dip. However, for your life, and if you ever were to get audited, it makes much more sense to clean it up. I talked about it before. Money goes into the business bank account. That deduction checklist that you have there, all those business expenses paid for out of that business bank account. Whatever's left over, transfer it over, pay your mortgage, real estate taxes, etc., etc. With those deductions, you guys, again, in industry, where basically your entire lifestyle you can justify as a write-off, which is excellent, okay? But again, and then we will probably talk about quarterlies, right?
Yep.
What you're saving on quarterlies. My rule of thumb, 20 to 25%. Conservative, set aside for quarterly tax payments. Worst case scenario, at the end of the year, you have a little savings, okay? When are you supposed to pay quarterlies? April 15th, June 15th, September 15th, January 15th of the following year, okay? Why I don't like paying quarterlies, I'll tell you, they will hit you with what's called an underpayment of estimated tax penalty if you do not pay your quarterlies.
So question on that. So if they work with the CPA, you or somebody else, they can get that paperwork from you, they can get a projection, that's how that can happen, right?
Correct.
Yeah.
Right now, my firm, we just got through a deadline. I hate deadlines, they suck. But we're focused right now on tax projections. So, hey, Joe, hey, team, here's my income, here's my expenses. I haven't sent anything in. Cool. We'll dial up a quarterly, get on the phone, and really plan out the end of the year. There's a lot of stuff you can do now at the end of the year that's going to save you a ton of tax dollars.
Now, with that, that's a great segue. Was there a question about commission checks, or did you want to clarify something?
Yeah.
You said your projection. You're talking about the projection, obviously. Like, so what if you're in, like, a brand new agent or someone that doesn't have the data to do a projection? Do you just say, okay, I made this much money this quarter, I'm going to put 25%, just go ahead and pay it? Is that what you would do?
There you go. If you don't have your expenses summarized, but you know you made some money, I say per closing, we've talked about this before over the years, just stick 20 to 25% per closing off to the side. And again, that's probably conservative, but so many times I'll see realtors and they're jamming, and then all of a sudden in 2, 3, 4 years, they have tax issues. And tax issues, okay, when you owe the IRS or the states, they accrue penalties and interest constantly until those taxes are paid off. Oh, well, let's just do a payment plan. They charge for those. I'm telling you guys, pay your taxes, make money, pay your taxes, and then do cool stuff with your money.
So if you are doing the quarterly, or if you're putting the 25% aside, are you not going to have, and you're just, I guess what I'm saying is, do you have to have the quarterly plan set up, or you will get hit with that underpayment?
Yeah, so to just slow down a little bit, because I do get going, you have to pay your stuff April, June, September, January for every year. You don't have to set them up. You can pay your quarterly tax payments online. We can create vouchers for you, and you can send vouchers in. Quarterlies are due for both the IRS and the state, okay?
Okay, so in that situation, there's no, like, don't have to elect that you're going to pay quarterly.
Nope.
You can just send the IRS a check or
That's
go
a-
online or...
That's a great question. A lot of people are like, oh, I'm making 1099 income. I need to file my taxes quarterly, or I need to elect quarterly. That's not the case. And let's say here you are today, you've made some money and you haven't paid yet. My recommendation would be, let's send some money in right now. Do a projection, send in some money now, here October 25th, maybe some more money in January, and then suffice your balance come April 15th of next year. At the same time, really plan out the end of the year. You have some things that are dropping off next year, we think. We don't know, because they basically throw a tax code on us like 2 weeks before the year's over, and we have to figure it out. But there's stuff that you can do now that you're not going to be able to do next year.
And we're going to talk about that in just a second.
Yeah.
Paul, do you want to add
Does that make
something?
sense, though?
Yeah, no, that answers everything.
Okay.
I think that was everything. My only question is your opinion. If you pay quarterly, are you less likely to get audited?
I don't think whether you pay them quarterly has anything to do with audits.
Okay.
You're just going to save on the penalties and interest. There's certain things, and I mentioned the Schedule C. 95% of all audits in general start on the personal tax return. And like I said, Schedule Cs and Schedule Es for you people that own rental properties, those are 2 high audit items. And I recommend removing those with LLCs off your personal return.
Ben, you got that?
Cool, thanks.
Okay.
I was just going to say, when there was a question about if you don't know your projections, what Joe was saying about setting up the business banking accounts, at any point in time with the software and technology out there, if you're running everything through those accounts, you'll be able to quickly see kind of where your net is at. And then another good way to set aside that tax money is potentially setting up a secondary bank account still in the business name, and just do it like they said, every commission check, just put a little bit over. because then that way you have that money set aside when it's time to cut those checks, because they can be quite large.
Yeah.
No, I like the separate bank account. Some of my realtors, they have their general account, their tax account, and then a payroll account once they've built their team and they have employees and that kind of stuff. Makes a lot of sense.
All right, so let's talk about deductions for just a second. So you guys all have that deduction checklist on your table. I wanted to get that to you guys a couple weeks ago. You have it now. So I want to get into maybe what you see for the future with deductions that may come and go. I want to answer your guys' questions as you look at that checklist so that you have an awareness around what the deductions may be. And so while they're looking that over, can you kind of walk through what you see for 2023 that might change?
Sure. The big one right now on heavy duty vehicles, so vehicles that have a gross vehicle weight of over 6,000 pounds, a lot of trucks, SUVs, there's a whole list on the IRS website. Right now, you buy one of these vehicles, new or used, okay? You don't have to put $1 down. You can finance the entire thing. And right now, you can take the entire purchase price in year one, bonus 179 depreciation. You can write off that entire price. And everything I'm seeing, that's going to go away in 2023. Again, we don't know because they changed things. But again, you need a vehicle, right?
Go get it.
Over 6,000 pounds, new or used. You don't come out of pocket $1. You finance the entire thing, the entire purchase price, 100 grand, you can use as a write-off. We would come up with a business use percentage. Yeah, Joe, I use it 90% of the time, and we would take 90% of that purchase price, and boom, you get the write-off now. That's probably gonna go away.
Question, Mitch?
Yeah, it's tricky right now too, trying to get these things ordered. A lot of the dealers, they'll give you a VIN number even if you don't have the vehicle. What I would need would be the purchase papers with a 2022 date on it.
Yeah.
Yep.
Now, my understanding is you can use that, or you could use that benefit, what is it, every 2 years, or was there any limit on how many?
No, it's just tricky with vehicles because once you depreciate any asset, rental property, a vehicle, if you were to sell it, you have to recapture that depreciation, which means you have to pay tax on it. So this is not something you would want to do every couple years. Now again, as your real estate teams grow, now you've added your wife, now you've added your teenage kid to the team, now we have multiple vehicles on the books. There's different stuff you can do with that too. That's exactly right. If you repurchase a new one, you recapture the depreciation there and then get the new depreciation on the new one. However, if the bonus depreciation goes away, then it's back to the old rules, which is over 5 years, you can depreciate that vehicle.
All right, so anything, yes, Don, will you throw that over there, Mitch?
Oh, yeah.
Thank you. Hey, so I got into real estate 2020, but prior to that, I leased a vehicle. My lease is up, but now I have to buy it because I'm way over in mileage. So if I were to change my lease into a purchase, does that qualify?
Yeah, is the vehicle over 6,000 pounds?
Yeah.
Yeah, they can reconfigure that and then the buy, that purchase, that 100% write-off. Yep.
Nice.
Get that done now.
Yep.
Yeah.
This is the stuff like when I do my tax projections, and Dawn's actually a client. We, I think, have something scheduled coming up. We go over, okay, here's where you're at. Let's do this. Let's do that. Talk to Paul or whatever financial advisor you're working with. You know, he'll get into like the SEP accounts or solo 401ks. For you guys, these are no-brainers. And these deductions that you're looking at there and his SEP contributions, look at it this way. At a 30% rate, whatever your effective tax rate is.
Listen closely.
Whatever your rate is, 30%, 20%, whatever your effective rate is, these write-offs, every $1,000 will save you $300 in taxes if you're at a 30% rate. So you're looking at a laptop, it costs $2,000. Well, guess what? You're gonna save $600 in taxes by doing so. Keep that in mind. That's important when you're looking at stuff. So, similar to SEP and Solo 401k as well.
So why don't we transition into that? We're going to come back. We're going to have some more Q&A, I promise. So I want you to understand Paul's side of what Joe just said, because we can do some things. Well, Paul can do, I can't do anything. Paul might be able to do some things before the end of the year, and I believe even if it gets into next year, we can retroact some things. So first, let's get into what is available to a 1099 independent contractor when it comes to savings.
Yeah, so the three main types of plans that we see are a couple that Joe mentioned, SEP IRA plans, which allow you to put up to 25% of your net income
Paul, will
into.
you put that mic up there?
That better?
Yeah, there you go.
Okay. So the SEP IRA plans that they set up, and these are mainly probably the most prominent ones that the independent contractors with no employees use. Mainly for the fact that you can put, again, up to 25% of your net income away, up to this year it's $61,000. So as Joe was mentioning, if you're getting a 30% break on that, that's saving you considerable amounts of money.
Let me just jump in really quick. So he went through that. What is the limit on a SEP right now? 61?
So it's 61,000.
So here's the thing. How many of you are coming out of a W-2 world? Dawn and who else out there? So with a 401k, what is the max contribution?
So as an employee under age 50, you could put $20,500.
So that's huge. So when these guys were all over me on the SEP, I'm like, wow, what a great opportunity. So keep going and talk about those, some of those
we
opportunities.
actually did a cash balance plan.
That too.
Which has even higher limits.
Yep.
Yes.
Yep.
Yeah, we talk about that too.
So the reason that I also said that it's important as it relates to having employees or not is because with a SEP, whatever contribution you make for yourself, you also have to make for your employees. So if you put 25% of your net income away and you have an employee, you're also putting 25% away from them. So a lot of times when you do a cost-benefit analysis, a lot of times the SEP may or may not make sense. And that's where other plans like setting up your own 401k, which you can do a solo 401k, if it is just yourself, no employees, that same limit is $61,000 as well, but it's a combination of you putting money in for yourself as an employee, doing a match for yourself, and then doing profit sharing at the end. And then Joe just mentioned a cash balance plan. That's the big boy. So once you get to a point where you're maxing out a SEP or you're maxing out the individual 401ks and you want to put more money away for yourself, you can basically set up your own pension plan. We hire third-party administrators that run all the numbers from us, but upwards of $200,000 or more can be put away on an annual basis. So again, as you're talking about tax benefits,
right.
For every $100,000 you potentially put away, it could save you $30,000 in taxes. And you just got to decide, do you want to save for yourself for later or pay the government?
So my question for you guys, and maybe this will help to get you guys thinking about this too, as we approach the end of 2022. Some of you, maybe you guys are all sitting on different, what I would call cash positions, right? You've got so some of you have had really good years coming out of 2021, which is probably your best income year. How many had in 2021 was your best income year of your entire life on this planet? Okay, yeah, mine too. And so some of you are probably sitting on some decent cash positions. What I think my question would be is, would it make sense before they maybe issue or pay any taxes is to look at what is possible from a deduction standpoint before they start writing the check? And so Paul, I want to start with you on what's possible now all the way up into 2023.
So I think one of the most important things you can do is have a team. And so that's a combination of attorneys, CPAs are probably the most important, and then financial advisors, and have all of those people working together.
Oh, that was nice, Paul. Did you see that? He said, you're the most important. Very, very kind.
Well, my paisans.
That's right.
So Joe or the CPA, they're really the quarterbacks. So as they're doing the projections and they're looking at different things, they're the ones that are coordinating with us, saying, all right, here's how much income they have, here's what their setup is, and then we go to the drawing board to try and determine what's the best plan for them. So some plans do have to be set up before year end, such as a 401k, because of the fact that part of the contribution is your employee contribution, and that has to be done before the end of the calendar year. The other plans can be set up to the tax deadlines. So profit sharing plans, SEP IRAs, or even cash balance plans, and that includes extensions as well.
Yeah. I was just going to say that up to the extension deadlines. So you can, if you fund one of these plans, we can file. A lot of people in my office, they extend just so they can fund their plan. So up until September 15th or October 15th of the following year, you fund for the prior year. It makes a lot of sense. And like they said, that's exactly what we do with the tax projections. Okay, here's where you stand. Now here are the options. Put 10 grand into the SEP. you can do this, you can do that, and stuff like that.
So and so I'm going to pivot to one last thing, and then we're going to open this up for some Q&A. What they just said is what I've been going through with them. So Joe is running quarterback. So what happens is he looks at tax exposure, right? Before we start writing the government checks, then Joe has a conversation with Paul so that Paul can say, well, Brandon, if your tax exposure is X, we might want to do this, that, or the other thing, which will then save you on taxes. So the question is where to start. We start with the CPA. You then do a consultation to see tax exposure for what's owed now. Then we do a projection. Then they would go to the financial planner. Is that correct?
That's right.
So walk us through that initial consultation and what it could look like. And is there any opportunity to go back in history to look at anything that might be amended?
Yeah, no, great. So for anyone in here, I was going to say this at the end, but I offer a complimentary review of your tax situation. Send in your prior tax returns. I review it. Jump on a call, let you know what I find, okay? So then you're in, we looked at your stuff, we do a tax projection, see exactly where you're at. My clients know where they're at now, all the way. There's no guessing game, there's no, well, I just sent my stuff into my guy and he called me back and he says I owe X, okay? That's not how we do it. We're very proactive. Get with Paul. I'm a big diversified guy. I like the stock market. I also like rentals. I like real estate. Real estate, there's hard assets. On real estate right now, have you guys ever heard of cost segregation? Okay, cost seg is very, very popular right now. What that is someone comes in and segregates out the cost of the real estate. You bought a rental, so now doors, lights, ceilings, it's all segregated. Long story short, you get a bunch of upfront depreciation on real estate. This is also a no-brainer because as real estate professionals, you can take those losses. So now those losses offset your income. That's all part of the projections and planning too. We have a guy, I think Brandon knows him. He'll look at, you give him an address, he'll tell you, here's your savings and here's what I would charge you. He'll give you a free review. Cost segregation is a no-brainer. He's in all 50 states too. On Brandon's point about going backwards, this comes up all the time.
Yep.
You cannot go backwards and do an S corporation. You have to a certain point to do the S corporation. You cannot go backwards and fund these plans if it's through the deadline. What you can do, if there is a mistake on the tax returns, you can amend. You can amend and add stuff in. Personally, I don't like to amend for write-offs. If I think the write-offs are low, I would say let's get it right moving forward. When you amend a return, it goes to a human being. I don't like that. Okay? Most tax returns go through a computer. Here's what they're looking for. I try to avoid what they're looking for, but when you amend, it goes to a separate department and a human looks at it. That's why I don't advise amending unless it's something drastically wrong.
That's a great point. So they have a consultation with you. And then do you see it the same way, I guess I'm positioning it, where before we start paying taxes that they should talk to a financial planner to see what's available?
Yeah, that's exactly right. Okay, here's where you stand.
Right.
You have a rental. You had a good year in real estate, thanks to Brandon. Let's do this, that, and maybe fund a SEP. We'll hook you up with Paul. Maybe talk to the cost segregation guy. That's right. Let's see where you're at. And then from that point, we'll send in some tax dollars.
Yeah, because not to get into the weeds of things, and I'm going to come right to you, Paul, but if you owe X amount of dollars in taxes, you may be able to put that money to give it to yourself as savings versus give it to the government potentially. And so I think, Paul, that's what we're going to get into. Go ahead.
Yeah. Well, the other thing I was going to say is when you're looking at setting up these types of plans, the tax advantages are huge, and it's one of the main benefits, but also just setting yourself up for the future. You get to eat what you earn. And so down the road, you could get tired. You might not want to work full time. And then you're going to want to have some different assets, whether it's real estate, rentals, investments, to be able to supplement that income. When you're a W-2, you work for a company, a lot of times these plans are set up for you. Like Brandon mentioned earlier, you set up your contribution and sit in and forget it. The company might give you a match. It's on you now. And so you have to be disciplined, whether it's, setting money aside for the quarterly taxes, setting aside, cash from every real estate deal for these types of plans. But it can be huge for the future. And the earlier you start, the better as it relates to compounding and increasing your money.
All right, questions for these guys? Yes, let's get that mic, Colton. Go ahead.
How's that work?
What is it?
Clothing seems to be a gray area. What's your opinion?
They hate suits. However, if it said Angel and Company, is that marketing? Is that advertising? The regs on it, you could argue this. Inside? Yeah, I think you can argue this. My approach, I call it a legally aggressive approach, right? I have clients all throughout the country, my license for all 50 states. I would never cross the line. However, much of the regulations are gray, okay? Yeah, I think so.
Okay, so get the mic if you guys got it so everybody else can hear. So go ahead, Ben, grab that mic back. He said if you're making
So it's really
content,
clear. Yeah. So it's really clear if you get a T-shirt that says reverse selling, that's obviously an easy write-off. You put your team name on a hat, anything, that's easy.
Easy.
But if it's your personal clothing, you're making content, does that change anything versus just day-to-day use? Because you're buying it to look a certain way in a video.
Yeah, really.
You're really pushing it, Ben. Okay.
No.
I need all the codes.
No, I'm telling you, I think that's part of your promotion, part of your advertising, part of the product that you're pushing out there. I think that's important. Something, if I came up here with the hat and jeans, I'm not a CPA. This is my costume for my presentation. I think we could argue that. I can tell you protective gear, like boots, that's 100% deductible. It's the clothing. Dry cleaning is a no. You can't do anything with dry cleaning. That comes up all the time too.
Go ahead, Mitch.
Yep.
Is there a limit on the vehicle purchase price?
No, but it's got to make sense what we do with it. Like if you get $100,000, yeah. Trust me, listen, this question, how many times, what's his name?
Mitch.
Mitch will call me and say, hey, look, I'm going to do a conference call with my wife in about 10 minutes. Here's the deal.
Don't do this.
I want you to explain the rules on the vehicle and tell us our tax savings. But really, it's gotta make sense. Your 1099 and other expenses, how aggressive we get. That's why we look at it and come up with the business percentage. But there's no limit on the purchase price on those rules.
All right, and the second thing is on the clothing. Is it even worth it? I mean, because it would be a nominal write-off.
Thongs don't count, Mitch.
Depending on what you're making. But I'm wondering, will that
Depending
flag...
on the content.
Okay, that's a good point.
Will that flag an audit, though?
That's a great point.
Would that flag an audit?
It's not. It's what flags an audit is when they go in and look at something, like on your personal return, heavy Schedule C losses or heavy rental losses. Your tax return has to make sense, okay? You own a house, it's $500,000, the mortgage payments is this, the food's this, the carrying costs are this, yet you show 30 grand on your tax return. That doesn't make sense, right? There's certain things that make sense. Now, once they look at your return, then they're gonna go line for line. There's not something like a category, like you're saying, that's gonna flag anything.
Got it, okay.
Does that make sense?
Yep.
Yeah, okay.
Thank you.
Yep.
So I'm Italian, so I'm asking for a friend.
So is Joe.
We talked about this yesterday, yeah.
Let's say that you need several different work bags to carry your items safely in your vehicle.
You would think that that's part of, I think you could justify office expense. Really, I have a bag there, I carry my laptop in, I have my cards in, it's being used for business use, right? Again, the code is gray. At the end of the day, too, I'll say this, okay? You're the taxpayer. You're signing the tax return. You're sending it to the IRS and to the state. If it got looked at, yes, if I file the tax return, I have your back 100%. I would battle with you, but you're the taxpayer, so you have to be comfortable with what you're doing. As you can see with these write-offs, especially for what you guys do for a living, you can justify your entire lifestyle.
Joe, with all the money they make, they're going to fucking Louis Vuitton.
Yes,
the mall. That's what's happening. Okay,
I know what she's, her bags.
Yeah, correct.
Her work bag, Yeah.
It was our friend. So is there a limit?
The friend.
Is there a limit?
Eyes on.
Is it,
Is
sorry.
that what you want? Is there a limit?
Well, again, you had $100,000 1099 your first year in real estate, and you spend 90 grand on office bags. It doesn't look right, right?
They always say it has to pass the smell test.
Yeah, it's got to make sense.
Yeah.
It makes sense.
One thing too, I'll say on these write-offs, maybe you guys know this, maybe you don't, but so there's certain ways to file. Hey, I want you to be aggressive, I don't want to pay any taxes this year, versus I want to buy a house, right? Or I want to buy rentals. There are certain write-offs that are non-cash expenses, like miles, like depreciation, like amortization. You get to write these off, brings down your taxable number, so you don't pay a lot of tax, but you add those back in for underwriting purposes, okay? I work with a lot of different mortgage people, like Steve. Those get to be added back in, so it's important, whoever you're working with, if it's not me, tell them your goals with the tax filing. Hey, we want to buy rentals, or we're looking to buy a house in a couple years, because we can, tinker with it where you don't get hammered in tax, but you're still able to finance a high number.
All right, we got 2 or 3 more questions that we gotta move on. Over here, and then we'll come back over here.
Yeah, so I have a LLC that I pull everything out of expenses, but on the quarterly tax payments, I have a CPA, and they says they stay the same all the time. Should you change those every year based on the income? You said like 20 to 25%.
Yeah, the quarterlies need to be adjusted. Again, if you're my client, we do your taxes, here's your quarterlies. But then we reach out October, November, okay, you paid April's, you paid June, now let's see where you stand. Cool. Those absolutely need to be adjusted based on your income.
Okay, and then one other quick question. I'm in Oklahoma. I saw something, you have to pay yourself an LLC a minimum amount. Do you have to pay, I know on an S corp, but on a LLC, do you have to pay yourself a minimum amount from the business?
You do not, and in fact, a member of an LLC is not allowed to be on payroll.
Okay.
You're supposed to take what's called guaranteed payments, but there's no limit. The limit's on the S corporation and that reasonable compensation, that wage that you put yourself on. Again, part of our planning process, people get freaked out with payroll. I don't want to hire a company. I don't want to do this. What we do for Brandon, other clients, when we do the tax projection, we issue the W-2 at the end of the year to keep you in compliance, and then you pay the payroll taxes on it. That W-2 and payroll amount becomes a write-off to the business. So you don't have to worry about constantly quarterlies and this kind of stuff.
All right, we got one over here. We'll take this one, and then we'll end over here.
How do we use our money for investments and not towards taxes? Is there any way we can do that?
Yeah, like he talked about with the different, and you said, how do I use my money towards investments to save on taxes?
Yeah.
Okay, different vehicles he talked about. Like I said, I'm a diversified guy. I love rentals. I like the stock market. I mentioned the cost segregation. You buy a rental, you're going to get a bunch of bonus depreciation. Stuff like that makes a lot of sense. As Brandon said, instead of paying the government, think smart, do different stuff with your money to save tax dollars.
So Paul, this is really good. This is what you and I talked about last week. This is specifically why Paul is on this stage. Can you walk him through some vehicle opportunities to do exactly what he was doing? And that's pretty much how we met.
Yeah.
Yeah.
So once you set up the type of plan that you want to set up, working with your CPA, determining how much money you want to put away, then you're just setting up investment accounts. You can buy whatever you want within it. So if you're looking at investing your money, that's a very personal conversation. Trying to determine, based on your risk, based on your goals, what do you want to accomplish, how you should invest your money. But that's the best way to get it, where you can save money on taxes and try and grow that money. When I equate this to investing, is like you guys are working to earn your money each and every year. So there's different ways you can invest it. You can invest in real estate, you can invest in the stock market, or you can invest in yourself. Hiring more people. When you invest in other types of assets like real estate, stock market, bond market, whatever it may be, the goal for that is that money's working for you while you're working for yourself too. So you get that compound effect.
Yeah, and the question I think you have, right? So if let's just hypothetical, there's $10,000 of taxes that are owed. There are vehicles that you can invest your money in. That's what you're asking, right?
Yeah.
Yeah, and so it is a very personal conversation, and I don't know, Paul, are you still open to having some conversations with people to look at that?
Absolutely.
Okay.
So just like Joe, one of the first things that we do is start with just an initial consultation.
Okay.
Look at the big picture, see what might make the most sense for you. Because, we can throw out tons of numbers of ways to save massive amounts of money in taxes, put money away for yourself, but you also have to be able to do it. And so, the goal there is just to make sure that we're putting together a plan that works for you.
And that's what I would do. I mean, just have a conversation. I cannot tell you the amount of taxes that both of them have saved me because of that conversation. All I'm suggesting, and this is not their words, is my words, is that before you write a check to pay those taxes, that you have a conversation with a Paul, with a financial planner to see what are my options here. Because I think for me, I found I'd rather pay myself than just pay the taxes. That's the point. Before you write that check, just look at the options. All right, let's go one more here. Who we got?
I guess my question is for the retirement plans. Do they still have the same penalties for early, like to pull the money out? Because that's the main thing that for 401ks. I mean, if I have $10 million when I'm 50, why the hell do I got to keep working until I'm 59 before I,
Well, it depends. So there's different rules for different types of plans. But yeah, on the retirement side of things, then yes, there's the same early retirement rules with the exception of 401ks. They allow you to go pull your money out not tax-free, but penalty-free at starting at age 55. But it's also a combination of different things.
Okay.
You do that, the retirement plans are mainly to set up to get the tax advantages, right? If you don't want the tax advantages and you just want to set money aside so that you can retire at any point in what you want, then there's other vehicles to look at. You can set up just a general brokerage account. On a smaller scale, you could potentially do Roth IRAs, traditional IRAs, other things where you might have access to some of the money sooner. But again, that's where it comes down to just a more personalized conversation to try and figure out what makes sense for you. What are your goals? When do you want to retire? How much do you need to start putting away in some type of vehicle to supplement that income for what you need down the road? And then,
that's what Paul and I do every month. We jump on a call every month. To your exact question is, what do I want access to? And what do I not need to worry about money, right? And then Paul does different things based on those goals. And so just like I was saying earlier, have a conversation because it's a great, great question. And if you need access to capital, let's just call in the next 30, 60, 90 days, well, a guy like Paul could do something with that so you don't lose or you're not paying penalties if the day comes when you need it. Does that make sense?
Yeah.
Yeah. And so I think the takeaway from this conversation real quick is to have a financial team, is to have experts so you have all your options on the table. I was hard-headed. I had a huge ego. Joe, tell me I'm wrong. No, I did. Yeah, that's right. So I said, once I had a financial team, it's amazing how much better, honest to God, no bullshit, how much better I sleep. And I fight Paul every fucking month still. Paul's like, oh, I got to call this motherfucker again. but no, for real. I mean, it just makes you feel so much more confident when it comes to taxes in your future and saving all of that stuff.
Well, it's cliche, but it's you guys focus on prospecting, being a realtor, generating sales, and let us,
that's right,
number nerds here take care of the tax stuff. So
if you guys have questions, are you guys going to hang out for a minute back here?
I'm going to be back there.
So let's do that, okay? So for the sake of time, take 5 minutes, and then we'll come back. We'll get into session 3. These guys will be back there after the session. You guys can go ask
Thanks,
questions.
Brandon. Thanks, everybody.
Thank you very much.
Yep.